What's up, everyone? In this video, I'm going to show you how to find undervalued stocks in the stock market using a tool called a stock screener. Now, I'm going to show you the stock screening tool at TradingView and at FINVIZ. These are two websites, but I'm also going to show you, how to do this with these tools, so you can do it at any stock screener that you come across. If you are with a stockbroker that has a stock screener and you want to use that, this method should work on that stock screener as well, as long as that stock screener has pretty much two metrics. I'm going to show you what those are. So let's get into it. I want to find undervalued stocks, also known as value stocks or value investing. So if you've heard any of those terms and that's what you're trying to get into, this is the video for you. Okay, so I have TradingView up. This is the chart at TradingView. I'm actually going to bump back out to the home page. So this is tradingview.com. And if you go up here to the screeners tab, you click on stock screener, and you get a ton of columns and rows, right? This is all of the stocks over here and a bunch of metrics on these stocks. So there's two things that we're looking for when we're trying to find undervalued stocks. And by the way, what I mean by undervalued stocks is we're looking at fundamentals here. We're looking at profitable companies that are cheap compared to the amount of profits that they're bringing in, the amount of earnings that they're bringing in. Okay, so this is not a video about technicals. This is not a video about growth stocks or stocks that are not profitable yet. This is going to be about stocks that are profitable that are considered undervalued based on the rest of the stock market, right? The value of those profits in that company compared to what all the other stocks in the stock market and its sector are trading at. If that makes any sense. If it's clear as mud right now, I will clarify it for you going forward. So let's take a look at all of these rows and columns. This is sorted right now by the largest companies in the stock market. So you can see all the way up at the top is Apple, and then you got Microsoft and Google and so forth, right? The largest company in the stock market in the world right now is Apple. So this first row right here is all about Apple. You can see the market cap is 2.8 trillion. That's the size of the company. And then the very next column is P/E, price to earnings ratio. This is really what we want to focus on. And these are the two columns that we want to focus on, actually, but this one is going to tell you how undervalued or how valued that company is. So this is one that is really going to tell us that information, but I also like to keep the market cap column sorted to the highest because I like to look at the biggest companies first. I don't want to look at little tiny companies that no one's ever heard of unless I'm trying to find something that no one's ever heard of. But when I'm looking for value investing or undervalue, I'm really looking for solid companies that I'm not worried that I'm going to lose my money in, right? So I'm looking for big companies, solid, things like that. So that's why I like to sort that market cap, so that I'm looking at the biggest companies in the world first. Okay, so we have it sorted by the market cap. Now let's look at this price to earnings ratio column. You can see Apple is currently at 30.68. What this means is at the price that Apple is trading at right now, an investor is paying $30 for $1 of earnings that Apple brings in, or they're willing to pay that, right? So that's kind of the value that Apple is at. An investor is willing to pay $30 for $1 of earnings from Apple. Moving forward to Microsoft, same concept. An investor is willing to pay $35 for $1 of earnings from Microsoft, okay? And then you got 26 and 63. Tesla is very high at 344. Facebook is at 23. And then you got this company right here, Berkshire Hathaway. That's Warren Buffett's company, 8.45. That number is a lot lower than all those other companies before it, right? All those other PE ratios before it. That is something I would consider to be undervalued. It's much lower than all these other ones. So that means we only have to pay $8.45 to get $1 of earnings from Berkshire Hathaway, right? That's a lot less. We don't have to pay as much. That means it's cheap. It's on discount. It's undervalued. That's how I look at it anyway, and that's how I like to explain it. Let me know down in the comments below if that doesn't make sense. I can help clarify. NVIDIA, $86. JP Morgan, $10. That's pretty cheap, right? Compared to all these other numbers. And then so forth, right? 25, 40, 29, 27, 14. Bank of America is pretty low at 14. So that is how you find undervalued companies to potentially invest in if this is what you want to do, right? You want to find companies to invest in that you think are undervalued right now, that have more room to run to the upside than some of these other companies, right? That's something I didn't explain before, is these companies that are already up there at 30 PE ratios or 60 or even 344, they're so high that this methodology suggests, well, if they're that high, how are they going to keep going higher, right? I mean, how much more are you willing to spend if it's that expensive already? Whereas things that have a PE ratio of 8 or 10 or 14, if they are going to come up to that level of those other companies, if they're going to come up to 30, that means that stock price is also going to go up with it, and you're going to make money if you're invested in it when it does that, right? Clear as mud. So this is how we find undervalued stocks using the PE ratio. Okay, so I did it with TradingView. I'm going to do the same exact thing with FINVIZ, and again, you can use this method on any stock screener. I'm just doing it on these two as an example, just to kind of give you an idea of how this works. Okay, so here is another stock screener. It's at finviz.com. You've got all the stocks in the stock market listed down here. I mean, there's a ton of tabs that you would have to go through to see them all. But you can see right here the total is 8,426, right? We haven't set any filters yet. So it's given us 8,000 stocks, basically. So how do we want to filter that? Well, we want to look for PE ratios on companies that are undervalued. We want low PE ratios, preferably on large companies. So we can set this market cap right here to mega or large, whatever you want to do. You can start with mega, and then you can go to large, and then you can go to mid, and you can kind of sort through them. Let's start with mega. All right, so now we're only looking at companies that are at least $200 billion or more. All right, that gives us a total of 51 companies in the stock market, and of course Apple up there at the top. All right, now how do we look at those PE ratios? Well, down here we can go to this valuation tab, click on that, and now these columns say market cap and PE ratio. You also have forward PE ratio, which is really interesting too. That's something that I like to look at. Basically, PE ratio, and we can sort by it right now to show what the lowest PE ratios are of these giant companies. So you have Berkshire Hathaway at the top. But PE ratio is the price that you're willing to pay for those earnings right now, where the stock is trading at right now. Forward PE ratio is saying this is the price that you would be paying for next year's earnings from this company. What this company thinks they're going to earn next year, the current price of the stock gives you this value. All right. So as earnings change from year to year, right? Companies think, okay, we're either going to do better next year or worse next year based on whatever they're saying, right? As those earnings change, well, your PE ratio is going to change as well, because the price, they're using the price of right now, of today, right? So a company like, let's look at Pfizer, for example, right? They're making vaccines. They're doing really well with these vaccines right now, so the PE ratio is a little bit higher. Well, they think actually next year the PE ratio is going to be lower. It's going to be at $9.40 because maybe the earnings just aren't going to be as much because they're not going to be selling as many vaccines. That's just a theory. I have no idea if that's why that is lower. That's just an idea, right? So that's why a forward PE ratio could be different from the current PE ratio. So that's also something to look at if you guys want to consider that. You can sort by the forward PE ratio and say, hey, look how low this one is. Alibaba, why is that one so low? Well, there's a lot of risk in that. Alibaba is a international stock, so you're taking on a lot more risk with that, but I don't know why it might be lower. So these are a couple of things you can play with to look for undervalued companies, and this is doing it with FINVIZ. I showed you with TradingView as well. So now you know how to do it with two different tools. And again, this method should work for any stock screener out there. You just have to sort by market cap and then look for the PE ratio that's low. You do want to be looking for profitable companies. That's why I like to look at large companies first. But if you're going to be searching for other companies that are a little bit smaller, just make sure you're looking for profitable companies, or else this won't work, right? You can't have a PE ratio if you don't have earnings, and earnings is basically just another word for profits, right? So make sure you're looking for profitable companies. Okay, that's what I got for this video, guys. I hope that helped you. I hope I answered some of those questions you were looking to have answered when you clicked on this video. If I did, hit that like button. If you're not a subscriber yet, hit the subscribe button. I do videos about stock market, a lot of how-tos, a lot of trading ideas. I like to make videos about stocks that I think have some good potential trades coming up. So if any of that interests you, hit that subscribe button. I'll see you guys in the next video. Thanks.